So within this video, we're going to look at a Leaving Cert Ordinary Level Incomplete Records question in relation to controlled accounts. So we'll just start by looking at what we actually have to do. So down at the end here, we see what's required. So we're to calculate Mary Henderson's capital on the 1st of the 1st, 2014. We have to calculate the total sales and total purchases using controlled accounts. We have to prepare the trading profit and loss and then a balance sheet to end with. So first of all, we'll have a look at part 1 is to calculate Mary Henderson's capital on the 1st of the 1st, 2014. So what capital is just the wealth. It's the wealth of the person, in this case Mary Henderson. So it's Mary Henderson's wealth and it's the assets owned by Mary Henderson. So what we need to do for a statement of capital, we need to find out what the assets and the liabilities are for Mary Henderson on the 1st of the 1st, 2014. So here we can see cash receipts and cash payments. So that's money coming in and money going out. And then we have the following information here. So we can see the 1st of 1st, 2014 and the 31st of December, 2014. These dates are massively important. But we need to decide which of these are assets and which of these are liabilities, which we should be relatively familiar with now. So just to make things easier and a little bit neater, I've just pre-typed out the assets and liabilities and the numbers that relate to them down here. So what you'll see is I'll just drag them across. It just makes things look a lot neater. So the first one is premises. We all know that premises would be a asset. So we go premises first of all, and the value of the premises is 490,000. So I have 490,000 down here. So I'm going to drag that across. The next one then we have is equipment. Equipment we have down here. So equipment, the next one, and the value of the equipment is 21,000. It was 21,000. Okay. Next one then is debtors. We all know that debtors is a current asset. So we have debtors is an asset. And the value of debtors on the 1st of 1st is 7,200. So we can pop that in there. Next one is stock. We all know that stock is also a current asset, and the value of stock is 16,500. So we can bring in stock of 16,500. Next one is creditors. So creditors, we all know, is a current liability. So we pop that down in our liabilities. And the value of creditors is 4,300. And we can just have 4,300. The last one there, and the value of the 1st of 1st is expenses prepaid. So we need to decide what expenses prepaid is. And what expenses prepaid is that we've paid in advance. So we've paid our liabilities in advance. So that's why it's a current asset and it goes into assets. And the value of expenses prepaid is 1,200. Now, the thing we must remember with this question, and this is a part where you can easily go wrong, is we need to have the value of assets and liabilities. Okay, so we have assets and liabilities here in the 1st to 1st. The one thing we need to remember is we have the balance, the opening balance of 14,900. So that balance would be either cash or bank. So we just need to put that in as well, because that's our opening. That's also an asset. If we have cash in the bank or cash in hand, it's also considered an asset for Mary Henderson. So now what we need to do is to add up all the current assets. So if we add up all these figures here, we're going to get a total of 550,800. So the total is 550,800, and the total of our creditors is 4,300. And all we need to do is subtract the two of them from each other, and we get a balance of 546,500, and that is the value of our capital. So it's fairly straightforward enough. Just to recap quickly, what we needed to do was find the statement of capital, So we put our heading in as capital as on the first of first because it's the start of the year. We took our opening amounts, so the amounts at the start of the year, and we separated them between assets and liabilities, added all our assets up, and took all our liabilities, and then subtracted them from each other. So what we're left is 546,500 of capital at the end of, or at the start of the period. At the start of the period. So the wealth that Mary Henderson has at the start of the period can be valued at 546,500. So the second part then of the question is to find total sales and total purchases using control accounts. So the whole point of this question is that if Mary Henderson has her own business and she didn't keep full set of books, which is very common. So if you're an entrepreneur, you set up your own business, chances are you're not going to be a qualified accountant. So all you're really worried about is cash coming in, cash going out, and what assets you have. So once you have that understanding, then you're able to create a trade and profit and loss account. So most people would be keeping record of cash coming in, cash going out, and hopefully the cash coming in is greater than the cash going out. That's the whole point of incomplete records. So in terms of the control accounts, so what we need to do is we need to check out what our total sales is. And the way we do that, the method we do that for incomplete records is we need to create a debtors control account. So we need to take into account all our debtors, which is people who owe us money from our sales in this case. So people who owe us money from our sales, and these people may have paid us throughout the year. So that's what we need to look at. Again, down the bottom left hand side of the screen, I just have typed out things that we're going to be using just for speed and neatness. On the right hand side here we have T accounts. So we have a debtors control account, so that's the first one that's looking in relation to sales, and we'll open up a creditors one now in a moment. Okay, I'll just move that across here. So we have our creditors control account. So we'll look at the debtors control account to begin with. So we need to start looking at things within the question that we could relate to debtors and sales. So obviously the first one here we can see is 69,800. We also come down and we see the debtors down here of 7,200 and 5,200. So we'll need to take into account these. So they're pretty much the three figures that we're going to be using to start this debtor control account. So the best place to start, the easiest place to start is always in relation to T accounts is the opening balance. Okay, so we need to start with an opening balance. So we'll just, I have balance. So this is the balance brought down at the start of the year, so the 1st of the 1st, 2014. So we have 1st of 1st, 2014. I'm just going to move that up here so we have the date and keep the neatness. So if we have a look down, we need the opening balance. So the 1st of 1st, 2014, we go down to debtors. So our opening balance is 7,200. So we have our opening balance of 7,200. It's always an easy place to start, and it's easy to pick up marks. Then the next part then is, so we have our opening balance of 7,200. What this part up here, so we see debtors up here. So what this actually says is we had debtors throughout the year, but they actually paid us. So it's cash receipts, so it's cash income for Mary Henderson. So it's basically saying that Mary received from her debtors 69,800. Okay, so Mary received 69,800. So what we need to do now is we need to take that 69,800 that was received, and we need to figure where to put it. Do we put it on the debit side or do we put it on the credit side? If a debtor pays us money, So debtor, receipt. So we received money from the debtor. So it's our income. It's going to reduce the amount that our debtors owe us. So if it reduces the amount that our debtors owe us because they've paid it, so if they've paid us, it's going to reduce that amount. So that's why we put it on the credit side. The opposite side to this is actually in the bank or cash. So again, the opposite side of this is the cash or bank. So we're going to credit the debtor's control account, and then the opposite side of this transaction is a debit in the bank account. We don't really need to show the debit in the bank account because we can see it here in cash receipts. But if you wanted, you could open up another T account and have the cash, the debtor is reducing here, and then it'll be on the debit side of the cash or bank account. So that's the first part. That's the easy part over. Now the next part, we just need to make a small calculation. So we've dealt with our debtors. We've dealt with our opening debtors. So all we have left is the debtors of 5,200 here. So for this one, we'll need to do a little working. So we're going to call this working number 1. So throughout the year, we can see that our debtors was 7,200 at the start of the year, and then reduced to 5,200 at the end of the year. So that is a decrease of 2,000 euro. So what we need to do now is we need to relate this 2,000 euro to our 69,800. So if our debtors decreased, it means we subtracted from the 69,800, which leaves us with 67,800. So that's where the 67,800 came from. So this can be considered our credit sales. So just put a heading there, credit sales, 67,800. We also then need to find out, so that's our credit sales. We also need to find out what our cash sales is. So if we just have a look at the question, we see our cash receipts. We see our sales is given of 143,500. So we just need to take that cash sales as 143,500. We just have cash sales. So then to get the total, then we just need to add these two figures together, and that will give us our total sales figure of 211,300. So we add them together is 211,300. So that's our total sales figure. Okay, so we now have our total sales figure. Now, just in terms of, just bring us back up to our debtors control account. So the figure that we need to bring into our debtors control account is our credit sales. So we need to see what our credit sales are, and which we talked about earlier on, is 67,800, which equals to our credit sales throughout the year. So we know that our sales throughout the year, our credit sales throughout the year is 67,800. Okay, 67,800. So then all we need to do with this account now is to balance it off. So as you may recall, to balance it off, we'll have a look at the debit side, we have a look at the credit side, and we see which side is bigger. So the debit side is equal, we add them together, that equals 75,000. This side only equals 69,800. So we know then that our total is going to be 75,000. So we put our 75,000 here, and we put our 75,000 here. We also just have to draw our lines, total it off. So now this side on our debit side equals to 75,000. That's fine. This side does not equal to 75,000. We've got a little bit of a shortage here, and that's going to be our balancing figure, or our balance CD. So in order to find our balance CD, all we have to do is take away our 75,000 from our 69,800, and that leaves us with 5,200. So now we can see that side equals to 75,000 and the credit side equals to 75,200. Our balance carried down is 5,200. And that's our debtors control account completed. It is also we also have our figure for our total sales. I just made a little small adjustment there, and rather than putting cash bank, I just cash received from debtors, just to make it easy to remember where the figure came from. So cash received from debtors, basically the bank or the cash account. So again, the next part of the question then is to look at a creditor's control account to find out the total purchases. So again, similar to what we did with the debtors control account, we always start with the opening balance. Okay, so we'll just bring across the balance figure, and we have to decide whether it goes on the debit or credit side. So a creditor's control account is people that you owe money to. So if you owe money to them, it's going to be on the credit side. Okay, so the opening balance for the creditor's control account, we can see down here, is 4,300. So I have 4,300 here, so I'm just going to bring that across. Okay, so there's the start. We always start with the opening balance. Again, similar to the debtors control account, we just need to go and find how much was actually paid by the creditors that we pay to creditors. So we paid creditors, cash payments, paid creditors 31,800. So if we pay creditors 31,800, we're just going to bring that amount over onto the debit side, because it's reducing the amount of money we owe to creditors. So it's reducing the amount we owe to creditors. Again, the next part we need to do then is we need to look at the creditors, see how has it decreased or increased. So we can see that the creditors amount at the start of the year to the end of the year has increased from 4,300 up to 5,700. So that is an increase of €1,400 in the year. So it's increased by €1,400, and we just need to show a working so we can find our credit purchases. So in order to find that figure, we need to see what our credit purchases is. So we have our credit purchases here. So how we calculate this figure is if we bring the 1,400, so the difference, the increase in creditors, so the 1,400, the increase in creditors, we just need to add that to the total creditors. So what we need to do is 1,400 plus 31,800 equals 33,200. So the creditors figure is actually 33,200. We then need to find the cash purchases. So the cash purchases can be found up here easily enough. Cash purchases 85,300. So we just need to add that 85,300, and that figure there is our cash purchases. So the total of them two figures, if we add them two figures together, our total then now becomes 118,500. So I'll just bring that amount across here. So now our total purchases is 118,500. Now we're not finished with our T account, so we still need to tidy this up. So we have our balance, we have our cash paid to creditors, and then we also just need to bring in our credit purchases, which is this figure here. So it's goods purchased on credit. So that's going to increase our creditors. So in order for us to increase our creditors, it needs to increase our credit balance. So I'm just going to bring the 33,200 across. I have one here, so 33,000. So then all we need to do now is to just balance off our accounts. So the exact same way what we did previously, we draw a line and we just double underline it. And then what we need to do then is we need to add up the debit side and the credit side, see which is bigger. The bigger side is our credit side, which equals to 37,500 when we add them two together. So we know that 37,500 is going to be our new total. So this side here equals to 37,500. This side does not. So that's why we need to bring in our balancing figure. So our balancing figure again is just the difference between 37,500 and 31,800, which equals 5,700. So now we are balanced because this side equals 37,500 and this side equals 37,500. I just need to put in this figure here for credit purchases so we see exactly, we have it labeled. So the next part of the question asks us to do a trade and profit and loss account. So this is where we're going to do a trade and profit and loss account for Mary Henderson for the year ended 31st of December 2014. It's important that you have the full heading in. So again, when you hear the words trading account, you automatically with sales, opening stock, purchase less closing stock. So that's what we're going to look at now. Again, down here we have some figures and headings that I'll be dragging across to create a trading profit and loss account here. So the first figure we always take is sales. So we have sales here. Now the sales figure is 211,300. So we bring that over to the far into the third column, what we normally use in class. And that figure is got from our working one. So if you have a look back at our working one, that's where that figure comes from. So I'm just going to put working one. The next figure in the trading account then we need to take is opening stock. So we have our opening stock of 16,500, which we can see here. We go to stock. 16,500 on the first of first. So I'll take that 16,500 and move that into our middle column. Then the next figure then, so opening stock plus purchases. So we put our purchases figure here. Our total purchases is 118,500. Again, our purchase figure can be seen in our working two that has been worked out already in our previous section, finding our total purchase, cash purchases plus credit purchases. So what we need to do is we need to add these two figures together, which gives us 135,000. Okay, so 135,000. We then need to take our closing stock away from that, so less closing stock. Move that out of the way, less closing stock. So our closing stock per our question, go to scan stock, last day of the year, 31st of 12th, 13,200. So I'm going to take 13,200 and move it there. So we're going to subtract 135,000. We're going to take 12,000 away from 125,000, which leaves us with 121,800. So we now have 121,800. Okay, that's our cost of sales, that figure. So we move it into the third column. So now all we need to do is we just need to subtract our cost of sales away from our sales figure. So we made sales of 211,000, and this is how much it cost us to actually make these sales. So purchases could be like purchase goods for resale and our stock. So we subtract these two figures away and we're left with 89,500. That 89,500, that figure is now our gross profit. Okay, so we have gross profit of 89,500. So that's our trading account done, our trading part. So now all we need to do is profit and loss. Okay, so to get our net profit, the first part we need to do is we need to take away all our expenses. So all our other general expenses. Within this, we can have a look, if we have a look at the question, what other expenses there are. So this is all money coming in, so no expenses there. No expenses apart from wages and general expenses. And then we have expenses prepaid down here. So there's going to be a slight working for this figure. So we'll start off with our expenses of 82,100. I'm just going to move these out of the way and create a working down the bottom left hand side of the page. So we have the 82,100, which is the amount we paid wages throughout the year, and then we just need to take our expenses prepaid at the start of the year. So our expenses prepaid at the start of the year, we add these two together. So we add these two together, and then we need to take our expenses prepaid at the end of the year, so the 700, and we subtract this figure. So you have 82,000 plus 1,200 less 700 leaves us with a total of 82,600. So we take the 82,600, I have it pre-marked here. So it's 82,600 is the value of our expenses. So I'll just bring across the wording, wages and general expenses, and the total of wages and general expenses is 82,600. So next expense then we have is depreciation of equipment. So just move the depreciation of equipment over here. We just need to do a quick working. So the value of the equipment at the end of the year is 21,000. It's actually at the start of the year as well, but we take the end of the year figure 21,000. So we take that down. Then the value of the amount of depreciation is depreciate equipment by 20%, 25% at cost. So the cost is 21,000. So we just need to take 25% of that, and that equals to 5250. So we have 5250. So it's going to bring that one there. Then all we need to do now is, sorry, wrong figure, 5250. So all we need to do now is we need to add these two figures together to find our total expenses. So we add these two figures together, and what we get then is 87,550. So just bring across that 87,550, and then it's just a matter of subtracting these two figures. So we have 80. So we just subtract our gross profit, our total expenses minus our gross profit, which leaves us with 1,650. So I'll just bring across that amount now, and then just to add on to this profit then is we just need to add on our commission onto this figure. So our commission per the question is 6,100. So we just need to add the 6,100 on. Here it is here, so we'll bring it down 6,100. So then our total net profit is 7,750. So just draw a line then. So our net profit 7,750. So that's the P&L done. That's our final net profit in the P&L. So next we'll just have a look at the balance sheet. So the next part of the question is to prepare a balance sheet at the 31st of 12, 2014. So I've just laid out the balance sheet, how it normally lays out. So we have this heading balance sheet of Mary Henderson at the last day of the year, 31st of 12th. Fixed assets, we have cost, depreciation, net book value, current assets, creditors falling due within 1 year, or current liabilities, and then financed by is the finance section, how to finance the company, how the company is actually financed. So again, I have all these figures put down here, and words that would be brought up in time. So they all these here relate to the question. Okay, so it just makes it a little bit neater and easier to see. So we'll start off with the fixed assets. So we need to see what fixed assets we have. So straight away we can see we have premises, equipment, and it looks like we purchased motor vans during the year. So we have 3 fixed assets. So let's start with premises, and then take across the equipment, and then motor vans. Okay, so there are 3 fixed assets. We can find the cost of each of these. So the cost of our premises is 490,000. So we just bring across to 490,000. The cost of our equipment is 21,000. So we have 21,000 here. I'll bring it across. And then the cost of our motor vans is 13,900. So again, I have one here. I'll bring it across. So that's the three of them sorted. The depreciation is calculated then. So we have calculated previously in the trading profit and loss. The only depreciation we have was this one here is 25% of equipment. So 25% of 21,000 is 5,250. And there was no depreciation on premises or motor vans. So all we need to do is, it's normally cost minus depreciation equals net book value. So since there's no depreciation for premises, the net book value is still 490,000. With equipment, the cost is 21,000. The equipment has depreciated in value by 5,250. So the value, the net book value of the equipment is 15,750. So I'll just bring that across there. And then motor vans hasn't changed either. There's been no depreciation in motor vans. So we can now see our new net book value. So we just need to add all these down now. So we'll just underline these. So if we add these down, the first column here, if we add them down, it equals 524,900. So that's right there. The next one is 5,250. Nice and easy. And then the final is 519,650. Again, the only column we need is the last column, so I can double underline these because we won't need these figures again. This is the important figure here we need, which is the actual value of our fixed assets on the last day of the year. The next thing we need to look at then is current assets. So we need to have a look to see what our current assets are. The easy way to remember all our current assets is the first one is always bank. Okay, the first one is always bank. So I'll just bring this across. Now bank, there's a small little calculation in relation to bank, and I'll just show you now how we do it. So cash receipts, this is money coming in, money going out. So money going out minus money going in is equals to our bank figure. So our bank figure is 17,600. So I can just bring that in there, 17,600. So again, just so you know, how we got that was subtracting 216 from 234,000. Subtract down to, you get 17,600. The next one then we always have is debtors. So we always have debtors, and at the end of the year our debtors is 5,200. So we just bring across this 5,200 here and put a label on it as debtors. The next one then, the next current asset we always have then is closing stock. So we need to find out what our stock is at the end of the year. So again, at the end of the year here, there's stock of 13,200. So just move the 13,200 across, and then closing stock. And then there's only one other one, which is expenses prepaid. So you'll see this here, expenses prepaid. So what that is, at the end of the end of the year, we've prepaid our expenses for next year. So that's why it's a current asset. So that's 700. So we just need to add all these figures together. So we add them up and we get 36,700. So 36,700. So I'll just move that into the middle column. So add all the current assets up, we get 36,700. So next then we just need to have a look at our current liabilities, or our creditors falling due within 1 year. We don't really have any short-term liabilities. The only real one I can see there is creditors, And yeah, that's the only one. So we just bring across our creditors. The amount of our creditors is 5,700, which is actually the total amount of our creditors. So what we need to do now is we need to subtract our current assets from our creditors falling due within 1 year, or current liabilities. We subtract these two figures, and this figure gives us what's called our working capital. So I'll just bring up this figure, working capital. So our working capital figure is actually 31,000 even. So 31,000. I just put the working capital in red here just because so you remember it's a calculation. So current assets minus current liabilities equals working capital of 31,000 even. So now what we need to do is we need to add our current fixed assets plus our working capital, gives us our net worth. So we add them two together, we get 550,650. And that's called, that figure is going to be called our net worth. Okay, so that's this figure here is our last figure in relation to this before we see how the company was actually financed. So now the final part now is just the finance by. So we just start with our capital figure, which is 546,500. If you remember, this was got at the very start, the very beginning. In relation, we found our statement of capital at the start of the year. So that's where this figure comes from. We then need to add on our profit, which is got from the P&L. So if you have a look at the P&L, we have 7,750 is the final figure we've been left with. So you bring across 7,750. We just need to add these two together. So we add these together, we get 554,250 as our total. Then we just need to take away our drawings. So less drawings, we are then left with a balance of 550,650. So we just bring that across here, and that's how we know we're balanced, because these two figures equal. So that's how we know we're correct. So that's the the final incomplete records in the ordinary level accounting exam. Okay, where we started, what we did was we first calculated our statement of capital at the start of the year. We then did our control accounts, so purchases and sales. From these figures that we calculated, then we can now complete a total trading profit and loss account and balance sheet. And we know we're correct because we have these figures here.